What's up everyone, it's Scotty with Money Investing. In this video, I wanted to go over one growth stock which is down over 92% from its all-time highs. They're trading at just over $26 per share. The reason why this company in particular is piquing my interest right now is because of the fact that they are also on the verge of turning the corner towards profitability. So we'll talk about this company and what the expectations are from Wall Street in terms of earnings and revenue, because they are going to be reporting earnings next week for the first quarter of fiscal year 2023. And again, we're going to be talking a little bit about the intrinsic value calculation for this business as well. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, a link to our Discord and Patreon is going to be down below. We've got very limited spots left. If you want to be a part of our money investing community, link's going to be down below for access to all the binds alerts, options alerts. I'm going to be closing out my meta cover call for a 70+% profit for my Tesla cash ticket put that's already done at over 75% profit. So again, if you want to get access to all of that, and of course the private live streams and the private videos, link's going to be down below. So the company we are talking about today is going to be none other than Fiverr. And Fiverr here trading at just over $26.76. It is down a little bit over 92% from its all-time highs. At one point, it was trading at well over $339. I would consider Fiverr to have had a very similar price action to that of Upstart. In 2020 and 2021, the stock was absolutely crushing every single other stock or index, up over 1,500%, very similar to Upstart. And then since, as the business has really slowed down, we have seen a pullback of over 92%. Now, if you notice the financials of the company, right? So if you come over to the financial analysis, you'll notice that a very, very nice consistent growth in revenue, right? Growing from 52 million to over $337 million. And take a look at that gross profit. Also, very nice consistent growth, going from about $38 million to over $271 million. Operating income has almost always been an issue, so you can see that they are generating an operating loss, and primarily due to the fact that they have a very significant operating expense. So if we actually come over to some of the numbers, I'm actually going to put myself up here again, and if we actually come over to some of the actual financials of the company from, let's say, last year, and you'll notice that this right here is going to be those numbers. Right here. So expand our service catalog. So they are also moving into towards artificial intelligence, but this right here is going to be that 12 months ending in 2022 versus 2021. And again, you'll notice the revenue increasing to 337 million, up from 297. Gross profits also up from 246 million to 271. So growth really is slowing down. It's not really significantly growing. However, the growth isn't so much on the revenue side, but it's really on the operating and income side, which we'll get to in just a minute. And again, if you take a look at the numbers here, R&D, sales and marketing, general administrative expenses, they have been going higher and higher every single year to 92 million last year, 174 million in R&D or sales and marketing, and $51 million in general administrative expenses. So as the company kind of starts to focus a little bit more towards cost cuts and more efficiency, the operating leverage starts to kick in, and it's possible that this right here, the number, starts to turn around on the bottom line from negative 74 million to positive number, and of course expectations for net income, net losses to be also moving towards net income, with diluted earnings per share also coming in positive. So we'll talk about that here in just a minute, but this right here is going to be their balance sheet. So they are sitting on $241 million in marketable securities and another $86 million of cash. So combined, they're sitting on a little bit over $325 million of cash and marketable securities, and other marketable securities on their long-term asset line, you'll notice is also sitting at 189 million. So we've got 241 plus 190, right? That's going to be about 430 plus another 86. We're looking at just over $500 million of marketable securities between current and non-current assets and cash. And you'll notice that their total liabilities are sitting at 658 million. Of that, their convertible notes are $452 million. So they've got more cash and marketable securities on their balance sheet as assets, as opposed to the long-term debt, and very close to the overall liabilities for the business. Total assets are almost $1 billion, and of that, goodwill is about $77 million. So very, very low amount. Less than 10% is goodwill, which is also a very good sign of a great balance sheet at the moment. So balance sheet's good. And then if you come over to some of the other metrics, other key performance indicators for Fiverr, you'll notice that in the 12 months ending in December 21st, active buyers were 4.3 million, representing 1% year-over-year growth, and spend per buyer was up about 8% to $262 per buyer is what they are spending. And the take rate for Fiverr was at over 30%, an increase of 100 basis points year over year. And with this AI boom, they've had over 600 new listings or 600 different catalogs of listings at the moment on their platform. Now, I've used Fiverr in the past, and it is, along with Upwork and some of the other platforms, it's actually one of the best places where you can outsource a lot of the work that you don't really necessarily want to do or hire somebody to do it. You can simply just go to Fiverr or Upwork to get a freelancer. Now, the quality of the work, you have to really vet it over time. And if you've been working with somebody and you like somebody there on Fiverr or on Upwork, and you can get the work done, then it's a very, very nice long-term relationship that you can build with that person, with that freelancer. But you have to kind of go through that trial and error process of kind of vetting them out first. And once you have done that, then it's a very, very smooth sailing. So I've used Fiverr for, scripting, for logos, for content creation, just a lot of things in general. And I've never had any issues except for a few different freelancers that didn't really provide up to the mark for the work that they were doing. And again, that's just more of a trial and error thing that you have to do. But once you're kind of set on a few different freelancers, you know what to do, and they provide you with some excellent work. So never had any issues there. Now, going over to some of the numbers here, and again, earnings expectations is what really is going to matter for Fiverr, because at the end of the day, we're looking for this company to turn the corner towards profitability. Right? If they're not profitable, it's going to be useless. We're not going to be able to calculate the intrinsic value on this business. There's a lot of companies now that are now on the verge of actually turning the corner towards profitability. Shopify is one, Square is another, Fiverr is another, Palantir is another. There's a lot of companies that in 2023 might end up actually being profitable. And if they can consistently sustain at those levels here, then it's possible that we see a lot of growth for these businesses. So for example, Fiverr, they're expecting $1.22 in net income. That's what the analysts are expecting here from this company. So that's really what the number is going to be. That's going to be a 72% growth on a year-over-year basis. So, and then of course, all the way up to $1.70 in 2024. That's going to be a 40% growth on a year-over-year basis. And then by 238 is going to be that number by 2025. So if you plug those numbers into our spreadsheet, you'll notice that the compounded annual growth rate is going to be just under 40%. But that's also for the next 3 years, right? That's not for the next 5 years or 6 years. That's also for the next 3 years or 2 years, really. So 2023 to 2024 and 2024 to 2025. Now, if we plug in that number for Fiverr, I'm not going to go with 40%. I'm not going to go with 35. Not going to go with 30%. Even if I go with 20%, which is like half of what the analysts are forecasting for the next 2 years, because we're projecting out for the next 5 years. Right? So in the next 5 years, if Fiverr can grow their net income by 20% and they can, trade at a multiple of close to 25, we go with a 12% discount rate, a 20% margin of safety, because again, Fiverr has that risk that it carries, and we go with, let's say, 5% share dilution, we end up with a price which is exactly where Fiverr is trading today at close to $26.76. So right now it's trading at $26.76. And again, this right here would be that support level to watch at around $25. And ideally, I would obviously like for the company to come down more so it becomes undervalued. But again, you can start to see that if Fiverr can grow their net income, in 2023 from $45 million to over $100 million by 2028, that's not really asking that much, right? All they really need to do is execute on this AI wave and also be able to increase profitability by cutting some costs and being more efficient in the way they do business. So 20% growth and a 25 times PE multiple. Even if we go with, let's say, 20 times PE multiple, we end up with a fair value of $21 after accounting for a 20% margin of safety and a 12% discount rate and a 5% share dilution. So if they do decide to increase their share count by 5% every single year, then even then the fair value ends up at close to $21. And the valuation as of 2023 would be 17.7, increases to 21, 21, 20, 20.4, and then stabilizes at 20 over the long term. And this right here is going to be that sensitivity grid for Fiverr. So it's got potential. I'm not going to lie. It has potential if it can turn the corner and, of course, be profitable, and that can be sustainable over the long term. Again, depending on the net income and the growth rate itself, you can kind of take a look at the P multiple and the different values for where Fiverr might end up. I ideally would love to at least have a starter position under $20. So if it ends up at around these levels at an all-time low again, I wouldn't mind. I mean, having a starter position, because the balance sheet is good, the revenue and the gross profit growth has been very consistent, and of course they are very much close to turning profitable for once and for all. So that's going to be the real question there for this company. And right now you'll notice a valuation a little bit over 21 on a non-GAAP forward basis. Again, 21 is actually not that bad, and trailing at 38, and price to sales at under 3, right? So margins are good, and they're trading at under 3, and price to cash flow at 15 times on a forward basis. And when it comes to profitability, over 80% gross margins, all they really need to focus on is how they can be profitable and generate operating income and net income, which is going to be difficult to do. But if they can successfully do it, this company has a lot of potential in my opinion. So hope you guys enjoyed this video, and a quick update on Fiverr. The support levels that I'm really watching is going to be $25 to as low as $17. And this stock is volatile. It can move very quickly, because this right here was an entire rally of over 70% for the stock, and this right here in one single week it rallied over 41%. So this is a really volatile stock, so be careful, and of course do your due diligence on this company as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. As always, happy investing, and I'll see you all in the next video.